those people who love trading gaps, to those people who love trading imbalances, and to those people who love trading wicks. So you got all this covered for you simply because we have this indicator that shows you wicks, that shows you imbalances, and as well it shows you the gaps in the market. And it's so different simply because you're going to select what you really want to see and it will basically appear right on your chart. So in this video we are going to learn about this indicator which comprises the gaps, the imbalances, and wicks. And to those who really understand gaps, wicks, and imbalances, they tend to be very good if you really want to execute trades. So let me show you what really happens whenever you will see wicks on your chart. You can basically see a wick and basically you can see multiple wicks. So for us and for me, I do pay attention on multiple wicks. I don't really rely on one wick and maybe decide to execute trades, or rather if I'm relying on one wick, I really have to wait for the second candlestick pattern and it's going to really show me the direction that I am going to follow. Let's talk about imbalances. And I know most of you really know about imbalances in the market. Imbalances is the same as what we call value gap or inefficiencies in the market. And the imbalances patterns in this video consist of 3 candlestick patterns. Number 1 candlestick pattern is the candle before the first sharp move, and the second candle is the candle of the sharp move itself, and the third candle is the candle after the sharp move. That's what really shows the imbalance or the FVG or inefficiencies in the market. So let's talk about gap. A gap is an area on a chart where no trading activity has taken place. A gap means that the low of the current candle is higher than the high of previous candle, and a gap down means that the high of the current candle is lower than the low of the previous candle. So that's what really means by gaps in the market. And so imbalances, I will show you how you can approach them whenever you really want to execute trades. So guys, in this video we're going to see this indicator that shows us all this and basically to see whether they can be reliable or not. Okay, so anyway guys, I welcome you to Money Close FX Education YouTube channel. Maybe it's the first time you came across my channel. I really welcome you. Kindly join us by subscribing to this channel, clicking on that red button written subscribe, and definitely you'll be part of this amazing family, because I believe and honestly I know this is why you belong. If you're ready part of this family, I really salute you. So right away guys, let's add the indicator on our charts. Click on indicator star. Once you click on indicator star, you're just going to type gaps plus imbalances plus wicks by Leviathan. Click on it. Once you click on it, definitely this is how it appears right on your chart. To those experienced traders, I know most of you can prefer trading imbalance, and so guys, you will choose what you really want to see under your settings. So you're just going to see the zone type, and you will see there is imbalance, there is gaps, and there is wicks. So if you really want to see the imbalance, you're just going to click on imbalance, and definitely here is the imbalance right on our chart. So here we have the imbalance. If you really want to see the gap, you click on gap, and at the zone type, click on OK, and basically you're just going to see the gap if there will be one. Then again, if you really want to see the wicks, you're just going to change the zone type to wicks. Click on OK, and definitely you're just going to see the wicks on your chart. Okay, and you can see definitely it has already shown you these are the wicks. And guys, have you ever known the importance of wicks in forex trading? Wicks, number 1, they really help us to know whoever is in control, either buyers or sellers who are in control. Okay, so when you see rejection from the higher prices, or rather you see price being rejected from the higher prices, that shows the sellers are taking over the market. So that's the importance of wicks. And let me tell you guys, you can use wicks to really execute your trades or for your confirmation. When you see too much rejection from the higher prices or too much rejection from the lower prices, you can execute your trades following the wicks, because they shows you who is stronger and who is weak in the market. So guys, I've shown you the importance of wick formation, and if you really want to execute your trades using the wicks, you're just going to draw your support and resistance level. So for instance, this is my resistance level over here, and maybe there is wicks from the higher prices. So I expect to see whenever price is rejected, it's closing below my resistance level. Okay, if there will be another wick, it must close below my resistance level. But when this happens, and it happened trend to close above my resistance level, that can be a breakout and the market can really proceed to the upside. So wait and see where the candlestick is going to really close it. And this is a trick smart money are using today to manipulate traders. Okay, they tend to shoot a very big candlestick pattern, like for instance it was a bullish candlestick pattern, and I know most of you will think of buying and this fails and they reject it, closing below your resistance line, and this trend to proceed to the downside. And don't joke with such kind of movement from this level over here up to this level over here. It can really blow your account. So guys, I've shown you how to use the wicks, so I will prefer us to talk about the formation of gaps in our charts. Whenever you will see the indicator showing you a gap, whenever you select a gap, I told you before, it really signifies that there is no trading activity that took place. If there was no trading activity that took place, and let's say you saw a gap and the market really proceeded to the downside, okay, in future you will see price coming back and fill this gap over here. Okay, so you can wait for price to really come back to this gap over here and fill that gap where there was no trading activity. This happens most of the times, but sometimes it fails. Okay, so the only thing is waiting to see whether the price will come back to the level. If it fails, just proceed with the trend, but when it comes back, be sure it has to fill this gap. And you see like confirmation, like multiple rejections, when you see candlestick patterns, when you see breakout structure, you can take advantage, proceed up with the price until that gap is completely filled. Okay, so that's the strategy you can use to trade gaps. Okay, so let's talk about imbalances or inefficiency. Unfortunately, you can use the same strategy when you see imbalances in the market. That shows you again there was inefficiency in the market. This is the same as what we call the FVG. You can call them the FVG zone. Okay, so when you see those zones still, you can really wait the market to come back to the levels, and definitely this is what I am really talking about. We have FVG zones over here. Okay, there was inefficiency, and basically you can really see the price had to come back to this level. That's why I've told you this may fail. The only thing you really need to do is looking for confirmation. But the reason why this fails, we had this structure over here that the market was unable to break above and it proceeded to the downside. So when you see these imbalances, or rather when you see this FVG zone, just know this simply shows you inefficiency in the market. The same strategy I have shown you, you can use trading the gaps. You can actually use it to trade these FVG zones. And simple as that, guys. If you really don't know how to identify FVG, you don't know how to identify wick, you don't know how to identify the gaps, you can consider this indicator. And the creator of the indicator says that this indicator is going to draw gaps, wicks, and imbalances with customizable fill conditions, okay, in multi-time frame functions, zone size filtering, volume comparison, and look back filtering. And he made this indicator to combine three similar but different elements that occur in price movement and serve as a significant zones of interest. Okay, so those zones also can work as your point of interest where you can look the market from, because it tells you something. There is inefficiency and there is no trading activity, and it tells you this is a zone where buyers are in control or sellers are in control. As simple as that. Using this indicator, basically you are going to add knowledge. Okay, so guys, let me hope you have learned something from this video. Don't forget to subscribe to this channel if you haven't. Don't forget to like this video as well, and as well turn on your notification bell, because I believe this is kind of content you really need in forex trading. So guys, what do I say? Bye bye, see you in my next video. Continue working hard, because I really know one day your hard work will pay you. Bye bye, guys. Success in everything you do.